You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for TWIFO. This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is over there at cmegroup.com. What's going to make it onto the show this week? I guess you have to tune in every week to find out. Is it going to be ags? Is it going to be equities, rates, metals, energy, crypto? You never know. Got to tune in to TWIFO every week. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever exciting, at least we tend to think so around these parts, Options Insider Radio Network. Remember, nearly a dozen programs coming at you on the network side, on the on-demand side for your listening pleasure. You want to go above and beyond, you want even more in your life, and who can blame you in these difficult, these troubled times? Then head on over to theoptionsinsider.com/pro. That'll get you access to nearly 200 plus hours exclusive content. That's a lot of content. You better be prepared, listeners, when you hit that button there. A lot of content. You can binge for nearly 10 days straight without eating, sleeping, taking a bathroom break of all that pro content. Of course, you get live access to everything else we do. And of course, fun giveaways like our pro trading crate. The Options Insider is the place to go as we go to look and see who's joining us in the CME Group hot seat this week on the program. And I'm pleased to welcome back. He hasn't been on in quite some time. Mr. Scott Bauer, the Chief Executive Officer over there at Prosper Trading Academy. Scott, welcome back to This Week in Futures Options.
Thank you for having me. Yes, it has been a minute.
Yeah, my producers tell me we have not chatted since November 5th of 2020. My goodness, a lot has happened since then, Scott. A wee bit.
Sure.
Just a wee bit has changed in the world and indeed in the markets. So let's start there. Obviously, a lot of new listeners to the network and indeed to this program since your last appearance. So let's start there. Give our listeners a quick overview of your background in the options and financial space, as well as what it is you folks do over there at Prosper Trading Academy.
Absolutely. So we teach people in markets during in options, stock, and we are with them, the educators, myself and a few other former traders that have, we have a combined about 100 years of experience trading. And we literally hold our students' hands. And we have everybody from beginners to, very advanced traders. And we are actively trading in the markets with them. And most importantly, teaching them and giving them the education of the whys, the hows, the wheres, how to take advantage of cheap volatility, expensive volatility, the different types of strategies you may want to use. And we're, like I said, we're live 8:30 to 3 o'clock Central Time every single day with our students. We're in here pretty much the full day. Some places you'll get in and you find the mentor, the guru, whatever is there for, half an hour of the day. We're here, bell to bell. We are here bell to bell. So that's pretty unusual in this space. And we love it. I mean, my passion obviously has always been trading, but on the side, I'm a teacher as well. And I love teaching. So, I get to get up every day and, thank the lucky stars that I get to do exactly what I want to do. And our other educators are really in the same place.
All right, then let's get the ball rolling, listeners. It is time for the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show we break down everything lighting it up to the light side, aka the upside, and to the dark side over there at CME Group this week. You want to see this report for yourselves? Follow us on Twitter at Options. Follow CME over there on Twitter. It's one of the few premium reports you can get access to from Bantix. You want to see the rest, and you listen into this show, I think you might want to. We really only scratch the surface of all the data they have to offer. Check them out, bantix.com, BANTIX.com. It's the place to go to kick the tires and light the fires on all the data we don't have time to get to on the show this week. All right, Scott, let's dive right on into it. Where should we begin our journey this week, sir? To the light side or to the dark side?
Well, it's got to be to the light side and maybe looking at one of the more hated rallies ever that I've experienced in 30 plus.
Not a lot of love. Not a lot of love for this rally. All right, to the light side we go, listeners. Number 5, we have soybeans. So starting off in the ags this week, listeners, soybeans looking pretty robust this week, up nearly 7.5% to kick things off. By the way, listeners, we are pretty heavily biased towards the green this week, another biased week. I'd say we're roughly 75-25 or so green versus red out there. So a lot of green on the screen, which really shouldn't surprise anyone if you've been paying attention to the markets this week. Number 4, we're staying in the ags, but we're shifting gear to livestock, in particular lean hogs. We were just talking with Carly Garner a few weeks ago about just the fascination, what's going on out there and the amount of paper we're seeing, actually, which is surprising in the livestock. Well, we're seeing it again this week. Number 4, it's lean hogs, up nearly 10%, 9.95%. So rocking couple of weeks for lean hogs. Number 3, we're moving on out to energy, one of our 3 frequent offenders. Let's see if we can get all 3 on the show this week. Number 3, it is nat gas, up 10.33%. It was number 3 in the same direction last week, up 8.06%. So banger couple of weeks for nat gas. Number 2, back to the ags, listeners. It is soybean oil, up 11.09%. And number 1, we're staying in the ags. Our big mover this week to the light side, oats, up 13.3%. Before you get all excited, oats not really a big options product, so probably not going to be sinking our teeth out there. Probably 3 contracts on the tape as we're recording this, but we shall see. Now, to the dark side we go, listeners. And again, we are mostly biased towards the green this week, so not a ton of red on the screen. Such as it is, number 5, we have silver off almost 1.75% coming in at the number 5 spot. So starting off in the metals to the dark side. Number 4, back to the ags, in particular livestock again. Number 4, we have feeder cattle off 1.81%. Number 3, back to the metals. It is platinum off 2, pretty much exactly 2%. Number 2, we're back to the energy, listeners. It is RBOB off pretty much 3%. It was a number 3 in the other direction last week, up 7.75%. So giving back some of those gains from last week. And number 1 to the dark side this week, listeners, we have another one of our frequent offenders. It is Bitcoin off 6.29%. It was number 5 in the same direction last week, off 1.5%. So again, you've seen a lot of the headlines, what's going on out there in the crypto space. No surprise, Bitcoin having a rough couple of weeks. All right, Scott, we've got a lot of things lighting up our movers and shakers this week. So maybe you want to start in one of those, or perhaps there's another complex that is drawing your eye this week. Where should we begin our journey this week, sir?
Well, let's start at your very bottom, which would be Bitcoin.
All right, to the world of crypto we go, listeners.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everyone. Welcome to the wonderful, sometimes fascinating, sometimes frustrating world of all things crypto, in particular Bitcoin. You guys and gals know where to go to find these reports for yourselves. CMEgroup.com/TWIFO. And once you're there, you're going to go into that asset class drop down. It's an alpha order list, so just go down one slot from ags into cryptocurrencies. And then we'll kick things off hanging out in the big products. We're going to go into indexes and then Bitcoin, where we will begin our journey from there. As we're kicking off the show here today, listeners, we're seeing Bitcoin still looking pretty rough. 25,000 handle, 25,165 in those front futures. So threatening to break the 25,000 level in the wrong direction. Off 1,310 handles, or nearly 5% just since Monday. Of course, you extend that back to the end of our show last week, off about 6.33%. So rough couple of weeks. SEC enforcement actions, they tend to do that. They tend to shake up a market out there. So, Scott, we'll start there. First off, I'm curious for you guys over there at Prosper, how big is crypto? Are you getting a lot of your clients out there who are coming to you asking about crypto?
We get, not quite as much as it was, a year ago, 18 months ago, but a lot of our clients asking about it. And, is it something we should be in? How do we trade it? Not just Bitcoin, but some of the altcoins as well. So yeah, we have a fair share of our clients that are trading it.
And would you say you primarily look at the listed stuff on CME? You hanging out in the spot? Are you slinging BITO? What's your preferred vector out there?
Yeah, it's the CME products, and then many of the coins, the more liquid coins on a Coinbase, let's say, where people have a lot of liquidity, a lot of access to it. We don't really go into any of those coins that are, scarce or that are going to be, let's call the meme coins. That's not our game.
No Shiba for you guys over there at Prosper.
I can't say we don't talk about it, but it's definitely not at the front of our list.
All right, so Scott, you wanted to start in crypto. What's catching your eye out here in Bitcoin this week, sir?
Yeah, so we saw that massive consolidation over what seemed like weeks and weeks and weeks, right around 27,000, and that was in the face of, as you mentioned, all of the regulatory hurdles and headwinds that have been coming at the space. And then all it took was Powell yesterday to sound a little hawkish, to talk about dollar policy, if you will, for Bitcoin to look at that and say, you know what, this isn't so good. So this sell-off here down to, well, I know we're up above 25 right now, but just under 24, you can look back and say, well, when Bitcoin foils, when it consolidates, as it did for a while, that's usually in anticipation of a large move, one way or the other. So this move is not unexpected. Whether it was up or down, this size of move in such a very short time is not unexpected. But where do we go from here? And I will tell you that so far, this level right around 25, and not because it's a big round number, which people like, but 24.9, 25 area, there's some support there. There is really some support there. So if it can hold there, I really think there's a chance we get back to that 27 number very, very quickly. Now, if it doesn't, you got to be looking for 23,300-ish as the next area. But I will say that overall, I mean, if you would have told me, 2, 3, 4 months ago that given all of the news, all of the hurdles, Sam Bankman-Fried, Binance, everything, all of the SEC issues, that Bitcoin would still be in the mid 20,000s, I would have said, you're nuts. So I actually think, and I know I'm probably in the minority here, I actually think this could be a buying opportunity.
So you're surprised by some of the resilience. I think that makes some sense out here. You would maybe expect, given all those headlines, that maybe we'd be back testing the 16,000 level where we were not too long ago.
Yeah, right around 20,000 or so. I mean, I think this has been unbelievably resilient in the face of just negative news after negative news coming at the space.
And you mentioned a buying opportunity. This is a refrain I think we're going to come back to throughout the show. But vol is pretty low. It's pretty low across a lot of asset classes out there. And Bitcoin, no exception. If you listen to our crypto rundown show every Monday, listeners, you've been saying for a while, we are at or maybe even exceeding 52-week lows in a lot of these crypto products, including Bitcoin. So I'm curious for you, Scott, does that make you maybe a little bit more attracted to the premium buying side? Is that how you're going to go in Bitcoin to scoop up some of these buying opportunities?
Absolutely. And with premium levels so low, if I want to establish a long position, I would not want to sell puts. I would not want to sell put spreads because you're just not getting the bang for your buck there when premium is so low. So I would much rather buy to the upside. You can also look, I know, there's other proxies for Bitcoin out there, and you can look at some of the other stocks also that kind of have a very high beta, a very high correlation to Bitcoin. And if you didn't, want to get in the token, you can certainly trade those stocks. Or, the micro Bitcoin product at the CME is a fantastic product to get in at a much reduced cost. And yes, the volatility is still extremely, extremely low. It's not where it was a couple weeks ago, but it's still, if you look historically here, we're in the lower 15 to 20% of its historical, volatility range.
Yeah, it's been fascinating to watch out here. I was just looking at some of the numbers on the TWIFO report while you were talking, Scott. I was hoping, given all the external factors at work here in the crypto space, that we'd see a little bit more paper out there on the big CME options this past week, and really not a ton of paper on the tape. We had 500 contracts last week and 300 or so this week. So not a ton. Again, this is a big, beefy contract, listeners. This is, of course, the 5X, a big contract. So if we expand that out to Scott's preferred vehicle, I know for a lot of you out there, the micro, they're doing a little bit more paper. But again, these are micro size. So once you adjust it for the size of the contract, still not a ton of paper. About 1,000 contracts on the tape this week and a little over 2,000 on the tape last week on the micro side, closing in on 3,000 last week. A little bit more action out there this week. So I could certainly see why some of you might prefer the micro. Still an issue for a lot of you out there trying to get into these. The liquidity just isn't there. So I could see why a lot of you are still diving into products like BITO. The liquidity is there. It can go into your securities account pretty easily. So I could see why a lot of you are writing into it. A BITO is your preferred vehicle, even though, as you said on the crypto rundown, the ADV and that product also continuing to go down. It's dropped from about 90,000 contracts a day down to about 30,000 now. Not a ton of paper going up out there as well, but of course it is summertime, so we expect a little bit of a lull in all of these products. Let's break down really quickly what's going on. Let's go out to the micro Bitcoin just for some fun. Of that, about 1,000 contracts this week. About exactly half of that is going up in the contract expiring on the 19th, so in about 4 days. So not a ton out there. Again, the vol, as we said before, pretty anemic. It's popped up a bit. It's about 6 points to the upside this week at about a 43. So it's not quite in the 30s anymore, but it's still fairly anemic. We also saw a lot of the CME products really leaning to the dark side last week. Heavy bids to the puts throughout the term structure. 8% bid were the June puts, 8.2% were the June weekly puts, 7% for the contract expiring in a few days. So a lot of bids to the puts. Now that we've moved down to close to the 25,000 strike, a lot of that bid has gone away, which does make sense. You're buying puts, you're moving down towards the strike, you're buying them in, you're going to take some of those off. So makes sense we see some of that bid come in. If we go a little bit farther out, listen, let's say we go out to D's, then like we're seeing in a lot of the other products out there, that bid to the puts is gone. And now we're starting to see flat skew or maybe bid to both wings. And on the micro side in Bitcoin, we're seeing about a 4% bid to the puts and about a 5.5% bid to the calls in December. So it's kind of a coin flip which way crypto will go after that. Since we're talking about crypto, let's look really quickly. Let's pop in on ETH. ETH usually a little bit more active, a little bit more volume. And that was the case this week on the micro side, a little over 3,000, about 3,200 of the micro Ether contracts going up. Ether, when we're kicking off the show here, listeners, 16.5, pretty much exactly, off 185 handles, or a little over 10% just since Monday. So Ether falling out of bed this week as well. Of that volume, about 28% going up in the SEP contract. So we'll look there really quickly. The vol out there, about a 44 and a third, up about 4 points, but still very low. If you know anything about Ether, you know it's structurally more volatile than Bitcoin. So you don't expect it to be trading at or even below the level that Bitcoin is trading at. So when they're hovering at the same level, might be some interesting vol spreading opportunities. In terms of skew, the puts right now are pretty bid in September. The calls are kind of flat, which is kind of interesting. We're seeing that on our crypto rundown program as well. The bid is starting to get a little bit into the put wing, not terribly dramatically, but it's starting to pick up there a little bit. And the most active contract out here this week was the 2000 call in December, going up about 360. Actually, might have been a roll. It's like the SEP and the D2000s both traded 360 times, so maybe a calendar or a roll going up out there. Scott, when you guys aren't talking about Bitcoin, you guys looking at Ether at all over there at Prosper?
We are. It's not quite as in our faces in the news as Bitcoin, but we absolutely do. But looking at CME, not just option volume has been really, really reduced. If you look at overall futures volume too, even today, so on a move like this that we're seeing in Bitcoin today, the big contract at CME has only about 9,000 contracts traded total, and the micro is about 5,000. I mean, that's pretty low volume. I mean, I think it just goes to show you that there may be a lot of people on the sidelines with this.
All right, listeners, as Scott mentioned earlier in the show, this is one of the more hated rallies in the history of time. And I know a lot of you, speaking of hating, a lot of you hate crypto. You love yourself some equities. So maybe we'll head out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the ever head-scratching, ever perplexing world of equities. You know where to go to find these reports. Pop on out of crypto, go down 2 slots on the TWIFO report to equity indexes. Then in the product family, you're going to select US Index E-mini, of course. They're going to hang out in the S&P 500. Where we go from there is anyone's guess. Scott, I know you're not talking crypto. You probably spend the lion's share of your time over there at Prosper talking about equities. We haven't chatted with you since the end of 2020. So as I mentioned, a lot has changed since then, including for the equity space, the rise of all things zero day. It has just taken over the equity complex. It seems like all of the action is in the front couple of days, and that's really it. Nobody cares about weeks or months away anymore. So let's start there. I'm curious for you, Scott. Where do you fall on this whole zero-day phenomenon? Are you a fan? Are you not a fan? What's your take on it?
Okay, so let me separate. Let me put on 2 different hats here. Okay, yes, volume has picked up considerably. About 40% of all SPX volume are zero DTEs. As a professional, and I'll call myself a professional only because I've been in the business for over 30 years, but as a professional, I think zero DTEs are great. For the casual retail trader out there, I think it presents some issues. And I think people that are just casually trading, looking to capture, a ton of premium in a very, very short time, or on the flip side, looking for one of those, one-off moves, I think you get into trouble. To use them professionally as a hedge against a different part of portfolio, use them to create some calendar spreads, some time spreads, I think it is a fantastic, fantastic product. Anybody that's just a casual trader out there, though, I think what you really need to do is learn more about it and learn more about the Greek of how the theta works, how that premium decay works, because that's just going to change literally in the blink of an eye. And that's where people that I have met, that I work with on a daily basis trading these, that's where they get into trouble. They don't realize that if you own a zero DTE, put or call, that come, noonish, maybe even 11 o'clock, noonish, all of a sudden you start seeing whack, that theta, that premium burn just hits you over the head. And a lot of people don't realize that.
Yeah, we were talking about that just on our previous show earlier today, about just yesterday and earlier this week, going into the Fed announcement that 0-day straddle went from $30 and collapsed to pretty much nothing in the span of a few hours there. So someone got left holding the bag on that. Certainly is intriguing, obviously poses a lot of challenges out there as well, which again, we always caution you listeners. They're intriguing products, but to definitely know what you're getting into with those. And of course, they're not set it and forget it trades. You're going to have to be on it. Outside of that, Scott, outside of all things 0-day, you mentioned at the top of the show, this is one of the more hated rallies. I definitely agree with you there. A lot of people not loving this. A lot of people sitting in cash, even in our audience, is a very options savvy audience. We did a poll a few weeks ago. We said, hey, are you in on this market? Are you pretty much in cash and looking for opportunities? And the majority said they were in cash. I was surprised. So a lot of people on the sidelines hating this rally. What are your thoughts on what we're seeing? Yet another leg up today, Scott.
It defies being rational. But as the old saying goes, market can be a heck of a lot more rational for a lot longer, or irrational, I should say, for a lot longer than my bank account or my trading account can handle it. So you do have to follow order flow. It's been very difficult to have an opinion in this market, because even my opinion, and I'm again doing this for a long time, my opinion has been to stay in some equities that you like, or stay in the S&Ps or whatever ETFs, but at the same time buy that cheap premium, buy that cheap vol. And I started doing that when the VIX was 1920, thinking, oh man, this is fantastic. This is a great do. Vol's not going any lower than this, right? And here we are with the VIX sitting at 13, 14. And so that hedge, if you will, of buying that cheap premium, lost on that side. Certainly you can make on the other side because you've seen the appreciation in the market. But it has been real tough. But you know what? I would still tell people right now that, if you've been in this market, if you want to stay in this market because you believe it's going higher, great. But you've got to buy cheap insurance, right? Anybody that is going to get insurance and they're going to shop around for their auto insurance, homeowners insurance, whatever it may be, you want to get it when it's on sale, or, when the what's not hitting the face, right? When there's not a fire out there. Well, now's the time to do it. Lock in some of that just by buying some cheap premium, whether it's buying upside calls in the VIX maybe, or downside puts in the S&P, Qs, whatever it is. Someone that doesn't do that, to me, that's just not the right thing to do. But who am I to say, who am I to tell anybody else how to spend their money? But as a trader, not an investor, as a trader, that's exactly what I'm doing.
Take advantage of some of those lower vol levels, kissing 13 handle in VIX not too long ago, and threatening it again coming into showtime. Listen, will I get my VIX June 15 puts off at my preferred level? I guess only time will tell. Let's get out here, see what's lighting it up out here in the mini this week, listeners. And a spoiler alert, it's Fed week, so a lot of paper hitting the tape. Over 4 million contracts on the tape in the mini S&P options right now, 4.1 million to be precise. So a whole heck of a lot of you slinging yourselves some E-mini S&P options. You don't need me to tell you the lion's share of that is going up and expiring today or maybe tomorrow at the latest. 20% of the paper this week is going out in the June contract that expires in about 3/4 of a day. 15% is going out in about 5 minutes. And another 11% expires in about a full day. So you're talking well over a third. You're talking almost half of this week's paper. You're talking, 46% of this week's explosion of volume all expires in the next pretty much day. So again, that just shows you how much the options landscape in the equities has been reshaped by this. Fascinating to watch. And the most active contract this week are the 4,400 calls, which again, we are north of that now, 44 and about a quarter. So another rally ho day here, up about 122 handles in the E-mini on the week. So since Monday. So nice green on the screen for all of you bulls out there if you are indeed loving this rally. And again, those calls that are going out tomorrow, 53, almost 54,000 of those trading this week, with the lion's share going up today, 22,000. Again, not surprising. We just broke through the 44,000 strike earlier today. So makes some sense. We see folks piling into those. 10,000 yesterday, 12,000 on Tuesday, 9,300 on Monday. Seems like folks were closing, taking those off earlier in the week. And then as the rally kicked in, they've been opening as a result. So more opening paper on the 4,400s as the week has progressed, which again, given this rally, makes a certain amount of sense out there. And then right behind that, listeners, we have the 36 half puts going out in a day. So again, all sorts of paper all over the place, lighting it up this week, including, looks like it might be some verticals going up out here. We have 20,000 of the 36 half puts going up yesterday, as well as 20,000 of the 35-20 puts. So 130 point vertical going up 20,000 times yesterday. It seems like it because it was opening on both legs. It seems like they might be bailing on it today, though, because 20,000 exactly going up again today. So put that spread up yesterday, taking it off. I don't know, 36 half puts with a day to go. That wouldn't be my preferred option or that vertical either, but looks like someone might have liked it. If that's the case, maybe our friends out there who have been blasting away at a bunch of premium in the E-mini, maybe they're deciding to start selling put spreads instead. That would be interesting. Maybe their risk manager tapped them on the shoulder. Stop picking up pennies in front of the steamroller. Either way, though, still garbage puts also lighting it up out here. But let's get to some more relevant stuff, listeners. Let's go down a little bit more. Let's go out 8 days, which is an eternity in the world of equities these days. Let's go all the way out to the 3,900 puts expiring in 8 days, because those are pretty active this week as well, including, not surprisingly, the last 2 days. They did nothing on Monday and Tuesday. Pretty much a goose egg, both of those days. Then they lit it up the last couple of days. About 22,000 going up on Wednesday and almost 21,000 today. Closing yesterday, maybe closing again today. Of course, who knows? The OI is kind of not as is kind of small there, so it looks like it probably opening paper. Opening on 3,900 puts. Interesting. We are again dancing in a precarious range, listeners, right north of 4,400. So 3,900 puts opening with about a day to go. Or it shouldn't be 8 days to go in this case. That would be an interesting turnaround if those were indeed to become relevant. Let's scan really quickly because it is mostly 0 day. Like I said, about half the paper is going up and expiring in the next 24 hours. But we can find some stuff if we go a little bit farther out. For example, if we go out to the actual June contract, which expires in about 15 days, we saw 32,000 of the 4,300 puts going up. So that's an intriguing strike out there. 4,300 puts trading pretty actively, nearly 10,000 contracts a day all week long and opening all week long. So interesting opening on that. Are they overwriting, or maybe, as Scott was saying, time to load up on some cheap protection? Maybe some folks are loading up on all that fun. Probably spend the whole show dialing into all these trades out here. There were 4+ million contracts going up in the E-mini, listeners, but those are some of the big dogs out here that were lighting it up. Scott, anything else catching your eye out here in the equities complex you want to talk about this week, or you want to move on to something else?
Well, let me point something out here. There has been, over the last several weeks, especially on some of the big tech stocks approaching earnings, this massive, almost to the point, something I have never seen like this before, massive call skew. Massive call skew. You can see it again in Adobe. Adobe announces today after the close of the market. We've seen this in NVIDIA, saw it in AMD, you name it. These big tech stocks have had just this incredible call skew. So, for instance, Adobe right now is trading $494. Okay, the expected move that the market is pricing in just to the end of the day tomorrow is about $37 or $38. Okay, and that's in either direction. So let's say you go out to a strike $40 away from where we are right here. So let's look at the the 450 puts. Okay, so the 450 puts are right now, and these expire tomorrow, are trading $2.60. That equivalent $40 upside call, which would be the 535, even if you go to the 540 call, trading double that. trading like $5.20. So there is just a massive, massive call skew right now, which at the end of the day tomorrow, that's going to come back into line. That is absolutely going to come back into line, but that just tells you where the bias has been and where the bias is coming into a lot of these earnings reports. It has just been massively. I'm not sure that I have ever seen this big of a skew, especially to the call side.
You think this is even outpacing what we saw back in the heady days of 2021, Scott?
I do. In terms of skew, yes. I can't ever remember it being this egregious. And there are strategies to take advantage of this, because what happens is, many of your listeners know, and what happens is implied volatility always reverts back to its mean. So after a big announcement, after earnings or a Fed announcement, whatever it may be, you're going to see that vol come back into line to where it typically trades. So I'm not saying that skew is going to come back all the way 1-to-1 tomorrow, but absolutely by early next week, we're going to see that come back into alignment. And there are ways to take advantage of that, but boy, oh boy. I mean, for me right now, this would be called, in option terminology, this would be called a conversion, meaning that if you wanted to put on this type of position where you are buying a put, selling a call, and buying stock as your head, that's called a conversion. And you're trying to lock in that massive, massive skew, that massive implied volatility difference. As a floor trader, we would be doing these till the cows came home. A little bit more difficult doing it, trading on the screens, but that is really the strategy out there. That's, for me, you want to take advantage of.
Stuff, listeners, are you out there slinging some Adobe? Hit us up. Let us know. Really quickly, I forgot to hit on the top of the segments here. A little bit of a quick vol rundown for equities. Can't talk equities without talking vol. As you said, VIX kind of anemic, kicking off the show, 14.25. That's still up from where it was this time last week, believe it or not, listeners. Up about 2/3 of a point. VVIX, so the vol of vol at around 92, almost 93, up nearly 5 points from where it was this time last week. Vol Q, so the at-the-money vol of the NASDAQ at about 1840. It's up about 1.25 points. That puts that VIX to vol Q. So that NASDAQ to S&P 500 vol spread, a little over 4 points. That's wide for that spread out there. We talk vol Q a lot on our Vol View show, listeners. That spread got pretty narrow for a while. So to see it back out 4 points, about 2/3 of a point wider than it was this time last week, that is intriguing stuff out there. All right, looks like we got time for about one more complex here on the show, Scott. So where should we head next, sir?
You tell me. I'd rather not go into some of the ags, as that is really not my sweet spot, but we can look at some of the currencies.
So a deep dive into lean hogs is what you're looking for, sir? I think we can make that happen. How about, there's a lot of action. A lot of our listeners are really all tied up in nat gas. How about a little bit of energy?
Yeah, sure.
All right, listeners, to the world of energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, you can't get out of here without talking a little bit of the old nat gas. You know where to find this. We pop out of equity indices, pop into energy. That's one slot above it. These alpha order lists, nice and easy to navigate. Then in product family, scroll down 3 to nat gas, then pop into the top product there to get your fix of nat gas for the week. Seems like a whole heck of a lot of you are slinging some nat gas. Usually this time of week, we expect to see it around 400, maybe a busy week, 450. Already 525,000 contracts on the tape in nat gas this week. So intriguing stuff. We've been saying for a while, when are we going to get this rally? When are we going to get this rally? A lot of our guests recently have been speculating about some upside. We had Carly talking about buying some SEP3s on the show a couple of weeks ago. Those are looking pretty decent right now, with nat gas at front future hanging out at about 255, up nearly 30 cents or about 13% just since Monday. Listeners, of course, you go back to the end of our show last week, up about 10.33%. Still hanging out right around that 2.5 level, which is where we've rallied to in the past. Then it seems like the rally has kind of petered out. Will this week be any different? I guess we'll find out. Scott, I'm curious for you. Nat gas is one of our frequent offenders on the show. It's certainly one of the more volatile products we talk about here on TWIFO every week. Is this one that's really become attractive to a lot of your clients over there, or is it maybe the opposite? Is it too volatile? Is it too much action?
It's not too volatile with the price down here. And when you see it depressed down here at, 2.5, whatever it is, and you look to see where it's come from and that it's actually traded in this range. I'm looking here basically since, let's call it mid-March, to now, we have traded in such a tight range here that a lot of people have been looking for a breakout. And a lot of people were looking for big rebound when it was also, when it was 3 and 3.5 as it came down. But this consolidation that we've seen here, this might be the start of popping out here, right? We're getting now with this increase this week and today, we're getting to the very top of its range, the same price that, same level that it hit just about a month ago in mid-May. That may give us a little bit of resistance, but if nat gas breaks through this area right here, technically, honestly, there's not a lot till we get up to almost the $3 level, which that would be a significant move. You're talking about almost 20% move from here. So I think that is a very good opportunity, especially with vol continuing to be low. I think that is a really good opportunity. And again, this is not unlike other asset classes. When you look at the charts and you see this coiling, you see this consolidation for a while, that is typically the precursor to a bigger volatile move coming up. And whether that move is up or down, that's the big conundrum. But I think that nat gas has put in just a major bottom here, and if it can get through the top of this channel here, I think you see that move up to $3.
It has been fascinating to watch this. It's been, 2.5 and down, threatening the 2 handle again. We've had a lot of guests come on and talking about the upside and how the trade is to the upside. And it seems like nat gas was poised to move to the upside. And yet every week on the show, we were talking about the skew being bid to the puts, tons of 1.5 and 1 3/4 puts going up every week. It seemed like we were in this weird environment where everyone thought it should be going up, and yet all the options paper, all the flow was in the other direction. This week, of course, we're getting that rally. I guess it sounds like you're on that upside tip as well, Scott, that you think maybe this could be the move that could actually have some legs.
Yeah, with vol at these levels here, I think buying the upside calls is definitely the way to go. I really do. And, again, to me, I'm a volatility trader. I want to take advantage of vol when it's cheap. I want to sell it when it's expensive. If vol was expensive here, I'd be selling puts. Vol is cheap. I'm buying the upside here. And is it a little speculation? Maybe. But again, if we get that breakout here, if we get any sort of situation here, there's a big time kind of dead air space up to $3, and that's what I'm looking at.
Let's get into that, listeners. Right now, I said over 500,000 contracts on the tape in nat gas. So a whole heck of a lot of you slinging some nat gas options this week. Scott mentioned the vol is going to be one of the frothier, more volatile products we talk about here at CME this week. About a 66. By the way, of that, nearly about over 500,000 contracts. 38% of it going up in this July contract that has about 12 days to go. So we're going to hang out there. The vol there is at about a 66, which may sound high when we're talking about VIX threatening 13 and all that stuff. That's up about 5, nearly 6 points on the week. But also, if you know anything about nat gas, you've been listening to this show for a long time, nat gas can easily get into the triple digits. So a 66 vol is almost literally 2/3 of where it was not too long ago from a vol perspective. So vol has kind of coming across the board. Nat gas, no exception. Getting a little bit of a back this week, but still, from an overall vol level perspective, still nowhere near as expensive as it has been. So intriguing stuff out there. And again, 38% of that paper this week going up in that July contract. So we'll hang out there. What's the skew looking like out there? Again, for a while there, it's kind of been looking bid to the puts. Then last week, we saw a little bit of a bid sneaking into the calls. Maybe enough was enough. People were just tired of seeing it getting beat down. They wanted to get some upside. Maybe they're listening to the show. A lot of our guests have been talking about upside plays in nat gas for the last month or so. Either way, the calls were bid last week, about 4.3% bid. So a slight bid to the calls, but a slight bid there. The put's about 2.3% cheap. This week, most of that has flattened out, which is interesting. Even though the vol is up, we're seeing the puts about 1.6% bid. So the puts have swung slightly in the other direction. The calls have come down to flat, about 0.7% cheap. So not a huge bid in either direction. So again, kind of the options market telling us a bit of a coin flip as to where we're heading next. In terms of action, we are seeing the 2.5 calls leading the dance this week with about 21, almost 22,000 contracts. That is a refreshing change. I kind of got tired of coming on this show week after week and saying 50,000, 1.5 puts are going up again this week and 1 3/4 puts. Just to see a little bit of upside making its way into the list, that is just a nice change of pace out there. Again, 21, almost 22,000 of these calls. The big day for them was actually Tuesday, 10,000 and change on Tuesday, mostly opening there. 5,500 today, so a pretty active day today. 3,300 on Monday, 2,500 on Wednesday. It seems like opening earlier in the week and then closing in the latter half of the week, which again, that makes sense. We were rallying towards it. So folks were putting on some 2.5 calls. Now that we've hit that strike and blown through it, maybe some people taking those off. Right behind it, we did also see the 3 calls. So getting back up to the upside that Scott was just talking about, the 3 calls going away in... Yeah, these are the AUG 3 calls. So going out in about 41 days, listeners. Doing 21,000 contracts as well. The big day for those today, those are exploding today. 12,500 of those going up today. Looks like all of that opening. 5,200 yesterday, also opening. 2,000 on Monday, 1,300 on Tuesday. It's like opening pretty much every day. A lot of folks piling into the 3s. Are you piling into the 3s as well? A lot of our guests have been talking about the 3 strike for a while, listeners. A little bit farther out, I think by September, but August could certainly fit that bill as well with this pretty aggressive rally we're seeing out here. Again, listeners, the question is, we've seen this dance before a couple of times now. Can we hold on to these levels? Or are we going to get to 2.5, then kind of just wither and die out there? Worth noting, it's not all calls all the time. There are puts going up this week as well. About 18,000 of the 2 puts, which expire in about 12 days, have gone up this week as well. The big day for those, Tuesday, 7,000 on Tuesday, 4,300 on Monday, 4,300 again today, about 2,000 yesterday. Looks like mostly opening with the exception of Tuesday, which again makes some sense. The level we've been threatening for quite some time. And not to be outdone, you are seeing a whole slew of 1 puts going up this week as well, including in October, about 12,000 of the 1 puts going up. 1 puts. Talk about a strike and an option that just has no magic to it. High in the 1 puts. Just nothing scintillating about that trade at all. I'd much rather talk about the 3 calls. But c'est la vie, that's where we find ourselves this week. All right, listeners. That music means we've come to the end of another intriguing journey through the world of all things futures, options. Scott, I want to thank you for joining us on the show this week. We'll have to get you back on more frequently than once every 2.5 years or so.
Well, I appreciate the opportunity. Let's do it again real soon.
And before we go, Mr. Scott, I'd like to leave our audience wanting more. So maybe really quickly here at the end of the show, if there's a complex that's been on your radar, maybe we didn't get a chance to chat about it, you wanted to mention it really quickly, or maybe just some intriguing trades or ideas or things that you're noticing in the market right now that you want to leave our listeners with. Now is the time, sir. The floor is yours.
Well, I would always tell everyone, buy when you can and not when you have to. So what that means is if you're looking to not even just look for a move to the downside, but buy that protection, right? Buy that risk in a little bit. You want to buy it when it's on sale, because if we get a print or if we get a move one day that all of a sudden the S&P is down 2-3% or a continuation of that, you are going to see vol spike. Buy it when you can, not when you have to.
There you go. Wise words, listeners. And Scott, if folks want more of those wise words, where should they go? What should they do?
Yes. Academy, which is prospertrading.com. You can find us. We're here in Chicago. We are in the Board of Trade building, and we are very accessible. We help our students bell to bell.
There you go. Check them out. Prosper Trading Academy, the place to go to learn more. You know where to go to learn more about all this data we're talking about on the show every week. CMEgroup.com/TWIFO. TWIFO is the place to go to kick the tires and light the fires on just about every complex under the sun. Doesn't trade much. You want to go sink your teeth into oats, or we didn't get to lean hogs and some of the ags this week. You want to go check those out. Maybe rates float your boat, or FX, whatever it is, it's there for you, listeners. CMEgroup.com/TWIFO. And then, of course, if you want to go deeper, you want to check out even more reports and more data, Bantix.com, BANTIX.com is the place to go. Tell Nick we sent you. He'll be very happy to walk you through all the offerings over there. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. Listeners, should be an intriguing one. Fed week, after all. A lot to unpack there on the vol front. And then after that, for all of you pro folks, we're coming back with Options Oddities, breaking down the mad week that was from an unusual activity perspective. You know, if you're listening to the option block earlier today, a lot of interesting trades going up this week, so we'll have a lot to sink our teeth into tomorrow. Then, of course, we're off for the holiday on Monday, so no option block, no crypto rundown next week. And then we're back again with our usual slew of content all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.